Alphabet, GOOGL, is trending after posting strong Q4 earnings, highlighted by accelerating growth in Google Cloud and core search, with AI increasingly cited as a key driver across both segments. The results reinforced Alphabet's position as one of the dominant beneficiaries of the AI buildout, as enterprises continue migrating workloads to the cloud and consumers engage more deeply with AI enhanced search experiences. Google Cloud once again stood out as a primary growth engine, with investors pointing to rising demand for AI training, inference workloads, and enterprise AI tools powered by Gemini. At the same time, search performance benefited from improved monetization and higher engagement, suggesting that Alphabet's integration of generative AI is beginning to translate into tangible revenue gains rather than simply acting as a defensive measure against competitors. Despite the strong top line momentum, the market reaction has been mixed due to Alphabet's significantly higher capital expenditure guidance for 2026, largely earmarked for data centers, custom AI chips, and advanced computing infrastructure. Bulls argue this spending surge represents a long term strategic investment designed to secure Alphabet's leadership in the AI arms race, similar to how early cloud buildouts created durable competitive advantages for today's hyperscalers. On the other hand, more cautious investors worry that the aggressive spending trajectory could pressure margins and free cash flow in the near to medium term, especially if AI monetization takes longer than expected to fully scale. This has sparked debate over whether Alphabet is striking the right balance between growth and profitability. Across the community, the dominant theme is that Alphabet is clearly committing to becoming a foundational AI infrastructure powerhouse, even if it means tolerating short term financial trade offs. Many investors view the current pull and tug between strong earnings and heavy spending as a classic investment phase setup, with the potential to unlock substantial long term shareholder value if Alphabet's AI strategy plays out as intended.
Okay, so Google is down 4.63%. I think the other one, Google with the L, may equally be down the same by the same amount. Let's find out. Okay, let's begin with GOOG. Underlying trend strongly bullish. However, the stock has been showing a decent amount of weakness within the strongly bullish trend. It has been printing lower prices since Monday, the 2nd of February. So this is now the fourth straight session of losses. And the extrapolation seems to be suggesting it might remain that way up till Tuesday, the 10th. From the 11th, it's expected that it might pick up strength. And the 40-day moving average is serving may serve as a it looks like it's going to serve as a resistance. It's not indicating that it's going to surpass it um, anytime this month. There's no indication that it's going to surpass it, but it's based on what we are looking at right here. But in any case, projections are saying 350.09, 361.76, 368.97. Okay, let's see what the momentum is going to indicate. Let's see what we have. Momentum is expected to remain subdued up till Monday the 9th, and not expected to pick up at least up till, let's see now, from maybe possibly the 18th of February. That's also then the stock would have also may have picked up strength. And it's indicating that if it does, it might. Currently, it's down. It's at a discount to its 10-day moving average. By the 19th of February, there's a chance it would have gone to, yeah, it would have surpassed that move. Yeah, but it may have crossed. It may cross over that, or it may have crossed over the that moving average. Okay, and it's expected to maintain the strength up till the 24th of February. Okay, so let's see now. Let's just quickly glance at its weekly chart. Okay, its weekly chart is going to be here. Weekly chart. We have the weekly chart. The indication is that we have a consolidation up till the 2nd of March, and then after that, looking at the prospect of lower prices printing all the way towards the middle of the all the way towards the summer. Projections here are saying 240.55, nothing to the upside. Momentum is also expected to remain subdued as well. Stock here is expected to remain subdued. The stock is now below its 10 period moving average. Yeah, it's expected to remain that way up till April as well on this weekly chart. Let's see what we have. This is the class C. Okay, this is class what? Alphabet class A. Class A. Okay, I think pretty much the same thing. The same thing. Yeah, it's pretty much the same thing. Projections are saying 237.34. Let's look at the daily chart. Yeah, same as well. Same extrapolation. Let's have a look at the market grid. Let's have a look at the market grid. Okay, the stock is outside of its market grid on this daily chart. The price is 317 right now. So the stock is, I can see the bottom of the grid is 321. So there's an indication that a buy the dip opportunity is here. Let's see, 321. Do we have 321 and then 322. So it has a stiff resistance above it if it begins to rebound. Yeah, there's an opportunity there. It's already way outside of its grid, but at the same time as well, the grid may expand and we may have something else altogether. But as things stand right now, it's looking like a good buying opportunity. Let's have a look at its 4-hour chart. I think the 4-hour chart will give us a better indication, since the stock is within the grid and there's a pivotal projection here. If it closes below this 315, if it doesn't hold here by the next 4 hours, then we are looking at the prospects of lower prices. Let's see now. Let's see what we have down here. 322. Yes, we have 322. So it is a resistance. 322, 327. So we have a strong resistance above. So lower prices are still very much possible. Much possible all the way down to 297. It's at 317 now. 312. It's If it goes there, it might drop. It might drop. So that projection. This is at 316, 315, 315, 315. If it falls below that, then we're looking at. If it falls and that doesn't hold, then we're looking at the prospects of lower prices. So 320. We have here 320. 320 is a Fibonacci projection. So if it does rebound, there might be a resistance, but the critical thing there is weakness. There's 315 we have there, and 312. It looks quite robust, but let's see how all of this will pan out, and I'll definitely continue to update you. Thank you very much for watching this video.